A new survey from Teneo showing optimism about deal activity next year. The results showing 68% of CEOs and top investors see an uptick in deals next year, despite increased regulatory pressure, higher cost of capital. Joining us now is Teneo's CEO, Paul Keary. Paul, it is great to see you. Thank you for being here. Let me start with that stat, Paul, because it sticks out to you. So an uptick in M&A, nearly 70% expect a sizable M&A uptick next year, which is interesting because you think there's Lena Khan and the FTC, ambitious, aggressive, higher cost of capital. So what explains that?
There's a couple of things, and it's interesting that trend is common across the world, not just in the US, but US has shown some of the highest senses of confidence. I think there's a view that access to capital will be a little easier next year. Inflationary pressures will ease. And also M&A from a defensive and offensive perspective expected next year. So there's been a lot of trophies out there. There's a lot of assets that people covet. There's been some dulling of the M&A market this year, which I think is set to release part next year.
And Paul, I'm just interested, do you delve into a little bit of what they're looking, when they say they want more deal making, is it because they want to move into new markets, new technologies, they want to acquire talent?
It is across the board, Josh. And I think what's interesting is that investors and CEOs, as they had last year in our survey, have a different view on economic optimism for 2024. Last year, you could argue investors were right if you look at the data on the markets, S&P, year-over-year basis. But this year, it feels like there is a sense of caution by CEOs on next year from a macroeconomic perspective. But there is a lot of dry powder, there is confidence and access to capital, and there is a need to make some strategic moves in the market next year.
This has been a year where artificial intelligence, AI, has been a huge theme, and I'm wondering what kind of conversations you're having with clients, because AI is so vast, and it's not really new, but the way it's being used is new, and there are so many different facets of it. What are your clients coming to you and talking about?
This year, Jared, there's a 20-point increase year over year on AI investing, putting new AI line items into the spreadsheet for business planning into 2024 versus 22 to 23. And US is an even higher number in terms of AI investing. So the allocation of capital to future opportunity is there. CEOs, however, anecdotally feel that they're being sold to a lot. The why they need AI, but not yet confident that has been addressed by the market in terms of the why and the how. How is it going to deliver consumer outcomes? How is it going to improve efficacy? How is it going to improve outcomes from a P&L perspective? So they're building reserves on the cost side. They're going to invest next year, but I think it's unclear yet as to whether they're happy that they offer and the spread of technologies that they're clear that's going to deliver value for their customers.